Hello everyone, welcome to my channel, and today I'm going to be covering some of the biggest earning reports that have been published in the last week. The companies I'm going to go through is Realty Income Corporation, Home Depot, NVIDIA, Royce and FuboTV. So on Monday the 24th of February, Realty Income Corporation, ticker O, reported their earnings. The revenue had grown. So they reported a total revenue of $1.34 billion for quarter 4 of 2024, which surpassed analyst expectations of $1.29 billion. They were expected to post an earnings per share of 38 cents, but instead they only posted an earnings per share of 23 cents, which was a 40% difference. Their adjusted funds from operations, which is one of the key statistics for a dividend paying stock, increased by 4%, which indicates solid operational performance for Realty Income. And finally, what I want to cover for Realty Income is that they had a very strong balance sheet with a debt to total market capitalization ratio of 28%. So this provides good financial flexibility for future investments, which will just help them grow the portfolio even further. Now we're going to move on to Home Depot, ticker HD, who reported their earnings on Tuesday the 25th of February. If you don't know what Home Depot is, it's a home improvement retailer. So how did Home Depot get on? Their fourth quarter sales for 2024 were $39.7 billion, which is a 14.1% increase from the same period last year. And their earnings per share were reported at $3.02. which is up from $2.82 per share the previous year. Now, the gross margin for 2024 was decreased to 33.6%, which is only down from 33.8% in the previous year, which does suggest pressure costs on products, but I don't think that's going to have much of an effect going forward unless that margin keeps decreasing. So overall for Home Depot, the company's revenue and earnings per share has exceeded analyst expectations, which is very good news, and they plan to enhance its online platform and expand its professional contractor services. So if they can capture more of this market, then that'll be good going forward. However, they have anticipated a 2% decline in adjusted earnings per share for 2025 due to potential challenges such as high interest rates affecting consumer spending. But overall, I would say that's a very good earnings report from Home Depot. So now we're going to look at the most anticipated earnings for this week, which is NVIDIA. And after their earnings, they've seen a decrease of 13%. Now, this doesn't just reflect their earnings overall, but the whole market is down this week. And some people thought the market depended on their earnings. So let's take a look at how they did. So they've been able to record a record quarterly revenue, which was $39.3 billion. This is a 12% increase from the previous quarter and a 78% rise year over year. And the full revenue for 2024 reached $130.5 billion, which is up 114% from the previous year. NVIDIA's adjusted earnings per share came in at 89 cents versus the estimated of 84 cents. So they've outperformed on the estimated earnings per share as well. They have said it expects about $43 billion in first quarter revenue for 2025, and this implies that year-to-year growth of about 65%, which is a slowdown from 262% annual growth in the same period the year before. But AI is going to keep kicking off, really, isn't it? So like AMD, NVIDIA has struggled in the gaming sector over the last year, so the sales actually declined 11% on an annual basis as they reported $2.5 billion in sales versus expectations of $3 billion. Could this be an issue going forward? It might be, but if the whole sector is struggling with gaming, I don't know. Is it really going to have much of an effect when AI starts picking up even further? I don't think it will, but maybe something to be cautious of. But it'll be interesting to see what happens, because they potentially have challenges over increased production costs and Trump's tariffs coming into play, which could affect semiconductor exports. And if DeepSeek is running on old GPUs, does that mean that they're going to start selling less new GPUs? Don't know what's going to happen here. I need to get more clued up on AI. That's all I know. Right, let's look at a UK powerhouse of a stock, which is Rolls-Royce. I'm personally a shareholder in Rolls-Royce, so I was very excited for these earnings. Had a feeling it was going to be a good one, and off the back of it, they've increased by 21% this week. So that just shows how good the earnings were. So let's jump into that. So the revenue had increased by 2.5 billion. Their operating margin had increased by 3.5% roughly. Profit before tax was increased by a nice £1 billion, and their earnings per share has also increased. And in their full 2024 results, they have announced that they will be paying a dividend, and that is the first dividend since COVID, I believe. So that'll be 6p per share, but it's got to go to a board in May. The 2025 guidance is that they'll have 2.7 to 2.9 underlying operating profit. So that is another £500 million increase for this year. They've announced that they're immediately going to buy £1 billion worth of shares throughout 2025, and it will be completed in 2025. So that's very positive. And their midterm targets have been upgraded. So they expect to have 3.6 billion to 3.9 billion of underlying profit, with 4.2 billion to 4.5 billion of free cash flow based on a 2028 timeframe. So overall, Rolls-Royce is looking good. I'm very happy with that. I know a lot of other shareholders are. Can't really complain about that one. But yeah, Rolls-Royce is smashing it. That's what you want to hear. And that moves us on to our last stock that I'm going to cover, which is FuboTV, ticker Fubo. Now, the reaction to Fubo's earnings is quite the opposite of Rolls-Royce, and they've seen a 19% decline in its stock price. So if we look at how they've done, they report a total revenue of 433 billion, which makes an 8% year-over-year increase. And they reached a record let's round up to 6 billion in North America, which is up 19%. Fubo's earning per share beat expectations, so they achieved a 2 cents per share loss, which is better than the expected 12-cent loss per share. They've able to achieve positive free cash flow for the first time in the last quarter, so that shows that they're getting more profitable. The negative in this report for Fubo, which was probably the catalyst for the decline, was the revenue fell short. So they were able to report a $431 million revenue compared to the estimates of $445 million, and the company has projected a 4% loss of total subscribers for the first quarter. But the positive on that is the launching new packages, so that should entice more subscribers. That means it's a small sell-off for a bigger, longer-term game. We'll have to see how that goes. And unfortunately for shareholders, they didn't comment on the merger that's meant to be happening. So I wonder if that has affected the negative price, but no information was given on that either. So yeah, that's been a quick roundup of some of the earners this week that have been very interesting. Let me know if I've missed anything out, and let me know what you think of the earnings, whether you're a shareholder or not, or if you've been looking to buy these companies. And yeah, if you've liked this, leave a like, subscribe for more, and I'll see you in the next one.